Morning, guys. It's Thursday, April 10th, 5:23 a.m. Central Time. Grain markets are higher this morning. May corn futures up 3 cents at 477. May soybeans up 6 3/4 at 1019 and a half. May Chicago wheat up 3 1/4 at 545 and a half. May Kansas City wheat up 8 1/4 at 576 and a quarter. May spring wheat is up 2 1/4 at 611. Of course, we could start off with tariffs today.
So tariff headlines were fast and furious yesterday. In the early hours of the day, China responded to President Trump's 104% tariff by increasing tariffs on U.S. goods from 34% to 84%, effective immediately. Later in the day, President Trump announced a further escalation, raising tariffs on Chinese goods to 125%. Trump believes this substantial tariff hike will finally bring China to the table for trade negotiations. Trump also announced a 90-day pause on all previously planned reciprocal tariffs, excluding China. During this period, the reciprocal tariff rate will be temporarily reduced to 10%. The 90-day pause does not apply to sector tariffs.
So I guess the fake news that was out the other day was actually real news, because this is the 90-day pause that the White House said was fake, but now it's real. Whatever. There's a lot of headlines swirling. Our grain markets, let's talk about the reaction there first. Our grain markets reacted very positively to this. May soybean futures gained 20 cents yesterday, which is actually kind of interesting because the trade war with China, our biggest soybean buyer, actually escalated yesterday. The trade war with everybody else de-escalated. I guess in any case, the market is optimistic about this. You've got progress with other countries. One other note is that Brazilian soybean prices have climbed a little bit on increased demand for soybeans out of Brazil from China, I believe. And I think that the trade may be thinking, and this is just a thought, the trade may be thinking that the tariff situation with China has become so severe that maybe it will force them to negotiate. And I think personally, if I had to guess, I think that's what happens eventually. Is eventually today? Is it next week? Is it 6 months from now? I don't really know. We're at a key area of resistance on the soybean chart this morning. 1024 above the May futures contract is very important. That's where the gap is from last week. And that's also where a big trend line comes in today. That's an important area. Corn futures rallied as well. The nearby May contract gained 5 cents per bushel yesterday. Also approaching some key chart resistance today. That 477, 478 area above May corn is a big area. Spring wheat futures was the best of the 3 wheat classes yesterday. Rallied a little bit, but still not great overall. Let's go to the stock market reaction.
So the stock market staged one of its largest rallies in history yesterday, triggered by President Trump's tariff rollback. The S&P 500 soared 9.5%, marking its biggest single-day gain since 2008. The Dow Jones jumped 7.9%, its strongest performance since 2020, while the Nasdaq surged 12%, notching its best day in 24 years and the second largest gain on record. WTI crude rebounded as well, rising 4.7% to settle at 62.35 per barrel. Meanwhile, the 10-year Treasury yield briefly touched 4.5% before pairing gains.
Trump told you in the morning yesterday, this is a great time to buy. That's what he said on Truth Social, and he was correct. I don't personally like that one person has this much power over the entire global economy, but that's where we're at. 9.5% up day in the S&P 500 is absolutely incredible. I mean, like trillions and trillions of dollars just swashing around in the markets on these headlines. We talked about this trend line yesterday, and I'll show it to you again today. You've got your trend line on the S&P chart that comes up off the COVID low through the 22 bear market low, and that's almost exactly where we bottomed this week. Now, was that the low for this move yesterday? I don't know. You could see another headline that's bearish today, and you can make new lows today. I don't know. I mean, the headlines are just, again, fast and furious, and got to pay attention, I guess.
The Trump administration is still considering farmer financial aid to compensate for the trade war. On Wednesday, Ag Secretary Brooke Rollins said that the administration is considering all available options. She also stated that the goal is to eliminate the need for payments, emphasizing that the tariffs are intended to realign the economy and ultimately generate long-term prosperity for U.S. farmers and ranchers. The government provided $28 billion in aid for farmers impacted by the trade war with China during Trump's first term. The heightened risk of an escalating trade war is impacting farmers at a time when the markets are already poor. According to Epic Bankruptcy Analytics, 88 farm operations have filed for bankruptcy so far this year, up from 50 at the same time last year.
So I know yesterday was kind of a feel-good day in the markets because everything was up. But guess what? November soybeans are still at 10.02 on the board. You're talking $1.50 to $2 below production cost for a lot of farmers in the United States, maybe more than that. So at this point, if I had to make a bet, I'd say, yeah, MFP is coming, or maybe they'll call it something different, but it'll be some version of MFP. There is not any new details here, really. The only thing I saw that was new yesterday is they used the word still. Yeah, we're still thinking about it, whereas they were thinking and talking about it for, the last 6 weeks probably. So I don't know. I think that this is going to be a topic or something that you see moving forward, barring some sort of huge rally in the soybean market in particular.
So if you guys have not checked out our premium content, you sure need to do so. Yesterday we did charts with Brian. We covered everything in agriculture. We did all kinds of energy charts. Joe, do you want to tell our viewers why it's a great idea to become a premium subscriber?
It's great. The chart videos with Brian are great right now, especially because the headlines are so wacky and incredibly difficult to follow. Perhaps the more safe and sound approach would be to follow the markets from a technical perspective. And there's actually a lot going on the technical side that kind of makes sense. Whereas if you're going to chase the headlines around, you're just going to drive yourself crazy and it's not going to make sense. So I think that Brian does a great job of kind of eliminating the noise and making sense of the markets from a technical perspective. The stuff yesterday was really good. If you want to see the premium videos, guys, go to standardgrain.com. You can sign up this morning. This is a $50 per month subscription. You can cancel at any time. There's no other fee. There's no other obligation. We just want to send you a whole bunch of information direct from us. We've got a USDA report today, which we'll talk about in a second. And USDA report day is a very good day to be a premium subscriber. I send out a USDA snapshot video, typically within 10 minutes of the release. Just a quick 3-minute overview. Hey, this is what you need to know about the report so you can go about your day. That's the whole point of it. Give that deal a shot this morning, guys.
Despite the ongoing trade war, China will receive a large volume of U.S. soybeans in the coming weeks. Approximately 3 million metric tons of U.S. soybeans are scheduled to be shipped to China by the end of May, with the majority of the cargoes purchased by Sinograin, China's state stockpiler. Due to the availability of cheaper soybeans from Brazil, Sinograin will likely have to sell the soybeans at a discount. The company will also have to absorb the cost of the recently imposed tariffs. About 2 million metric tons of the shipments will be subject to the 10% tariff imposed by China in early March, and roughly 800,000 metric tons will be subject to the additional 34% tariff that was implemented last week, bringing the total tariff rate to 44%. As of late March, about 600,000 metric tons of old crop beans had yet to be shipped to China, raising concerns over cancellations.
I don't know if the news is correct here, because Sinograin is the Chinese government, basically. I
Right.
don't know that they're going to make themselves pay themselves tariffs, but that's
Makes
kind of
sense.
what Reuters said.
Yeah.
Sinograin can waive the tariffs. They don't have to pay the tariffs, I don't think. So that's why they're going to continue to take beans from the United States, and that's something you got to be aware of. Is that the tariffs on U.S. soybeans, like something here in the United States, they're going to be paid by the importer in China, and if the importer in China is the government, they don't have to pay tariffs to themselves. So yeah, we still got some unshipped beans that are going to get sent to China, but the trade war right now hasn't really changed very much, tangibly, because we don't ship a ton of soybeans to China this time of year anyways, or sell a ton rather. The stuff that I'm worried about would be more so what we talked about yesterday, would be like new crop sales to China, which would begin, late spring, early summer, that sort of thing. So they can waive the tariffs. The government can do it.
On Wednesday, President Trump signed an executive order to boost domestic shipbuilding. The order will allocate funding to revitalize the U.S. shipbuilding industry with the goal of reducing China's influence in global shipping. In March, Trump announced plans to impose a fee of approximately $1 million on Chinese ships and on vessels from fleets that include China-made ships each time they dock at a U.S. port. The proposal, of course, has faced strong opposition from the global shipping industry. The American Farm Bureau Federation has warned that the proposed fees could increase the cost of U.S. soybean exports by 9.5 to 27.5 cents per bushel.
So this plan to impose these vessel fees is changing in real time. U.S. Trade Rep Jamison Greer on Tuesday told the Senate Finance Committee that the administration was making revisions to the plan based on public feedback. And the public feedback, I believe, has been overwhelmingly negative, especially from the farm lobbies. So we hope that it's changed. I think that the original plan said that they were going to, it was more broad based. Now they're talking maybe some exemptions, and it could be based on vessel capacity. I don't know. I think it's going to be a lot different by the time it's all said and done.
USDA will release its monthly crop production and WASDE report here this morning at 11 Central Time. Traders expect USDA to reduce its projection of corn ending stocks for the current marketing year, likely due to a perceived increase in the export projection. No significant changes are expected with regard to U.S. soybean and wheat ending stocks.
You know, it's a heavy news cycle when the USDA report is the sixth story of our show here this morning. So with the corn ending stocks number, yeah, they're looking for a 30 million bushel reduction to the projection. And this is the projection for how much corn will be left over in the United States on August 31st. And the idea, I think, behind this projection is that USDA is going to come up with its export number because the pace of sales and shipments has been very strong. There is an argument to be made that perhaps USDA has been overstating feed demand, and that maybe they drop feed demand, they come up with exports, and you're left with a number that's like unchanged. But I think the market is looking for a friendly number with regard to corn. Soybeans, I don't think you're going to see much. The trade's not looking for much. Same thing with wheat, global stuff, not any significant changes expected. Even South America, we're not really looking for much. Maybe some reductions in Argentina, but no major shakeups to be expected.
U.S. ethanol stocks rose to historically high levels last week. The stocks number of 27.03 million barrels was up 1.6% on the week and up 3.2% versus the same week last year. As we've seen in recent weeks, stocks remain at levels comparable to those seen during the early stages of COVID. Weekly ethanol output of 1.02 million barrels per day was down 4% week over week and down 3.3% compared to the same week last year. According to Reuters data, U.S. ethanol production margins are currently near break-even levels.
Production's good. That's like the third best seasonal print of the last 10 years. Nothing wrong with that. This stock situation continues to be problematic. I hope that when and if all these trade deals are cut, it involves selling some more ethanol to some of our trade partners or to-be trade partners, along with some grains. We saw the headline about Europe the other day, how Trump wants them to buy more energy products. We need the same thing to happen with grains and apparently ethanol.
USDA reported a flash sale of soybeans yesterday. U.S. exporters sold 7 million bushels of beans to unknown destinations for delivery during the current marketing year. Despite the ongoing trade war, accumulated soybean sales are up 14% compared to the same period last year.
We've got our export sales report later this morning. I'll be curious to see what sort of activity from China in particular that we'll see. This probably wasn't China, but I don't know that for sure. What did cattle do yesterday?
Cattle futures had a big day, of course, supported by Trump's tariff pause. Live cattle were 320 to 475 higher. Feeders were up 325 to 647. Box beef prices were lower yesterday. Choice was down 24 cents at 337.86, and Select was down 145 at 320.61.
Volatility continues in the outside markets. The Dow Jones is down this morning, 470 points. S&P is down 85. Bonds are up a full handle. U.S. dollar is sharply lower. Crude oil is down $1.50 at 60.86 in the May WTI. Gold is on fire, up another $56 in the June COMEX contract at 31.35. That's got to be new all-time highs or damn close to it. Have a great day today, guys. Report at 11 Central. We'll talk to you on Friday.